Hey, good morning, everybody. Welcome to Tuesday, April 28th. And hey, we finished up the last week here, a couple more days to go in April. You will see that I am back in the office today, have a few clients to see. So we'll be here today doing that, and we'll be here tomorrow. So a couple days here in the office. I think probably Monday we'll be going back to staying open all the time. Haven't made that final decision yet, but definitely leaning that way right now.
Point 7 Light FM. It's 8:36 here, 24 before 9. Time check in and find out what the Sam Hill's going on with your money now on Wall Street. And to do that, we always get the up-to-the-minute information from our friend Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. We got an oil crisis going on again this morning, don't we?
Yeah, we do, Dave. And it is not good. You saw something that I didn't even see, that they're going to roll the futures on oil early. And that's got to have some people upset today.
Oh, yeah. One of my newsletters said that S&P Dow Jones says it's rolling June contracts over to July on Tuesday. That would be today. That's a whole 3 days early to roll things over. And that's going to be a little bit of a surprise to the commodities traders because that news just out this morning. We trended downward to the point where we were down to $11.31 a barrel on June futures. And I just got to assume that today is going to be one hellaciously wild ride on the price of oil futures until it closes tonight and it rolls over to July, wouldn't you guess?
I would definitely say so, Dave. I would not be surprised again if we don't see some negative numbers in oil pricing, because who wants to be holding it if you don't have a place to put it?
Absolutely. I was flippantly saying when we first got on the phone, we need to put out an all-points bulletin to all of our canning ladies that there's a call on jelly jars because they're going to be looking for places to stash this oil because what did it say, 2 weeks you figure that we're going to be completely slap out of places to store it?
Yeah, about between 2 and 3 weeks. We won't have any place. Everything will be full.
Oh, lordy, lordy, lordy. It's going to be interesting watching the oil futures today, maybe even more interesting than watching the equities markets. We ended up with a good day yesterday again. This has got to be just all optimism over the likelihood of opening up some of the economy. Dow was up 359 points yesterday. That was 1.5% up. NASDAQ up over 1%, up 95, and the Standard & Poor's was up almost 42. That was darn near 1.5% up. We're riding an uptick right now, and if this actually holds, this will be the shortest bear market in history because it's growing back up nicely. And you and I both kind of have a cynical attitude toward this because as we keep going and we get more government reports, every time we have one of these corrections or bears, we always test the bottom one more time, don't we?
Yeah, we do. And so when I look, as a matter of fact, I've been reading a few headlines, and there's some big traders out there that are shorting this market significantly, believing that we do have to test those lows again. And they're hanging out there gambling pretty big here that we will test those lows again. And you and I believe that has to happen for us to really make sure that we've got a firm footing to move up on.
And that's the distinction. I mean, you can still be bullish and say, I don't trust the charts to stay as high as they are right now. And that kind of impacts the strategy of somebody that might have been a little bit heavier in equities than they should have been 30 days ago when this tumble started. Kind of an opportunity for somebody to look at their IRA and saying, well, I don't lose too terribly much if I make some shifts now, and I insulate myself against what could happen in another 3 to 5 weeks, right?
Absolutely, Dave. I mean, right now, people are being given a gift to be able to rebalance their portfolios into a more safe and secure investment. Folks, especially if they're in a danger zone, Dave, that 10 years prior to retirement, 10 years after retirement, those are so critical when it comes to retirement. And so now people have an opportunity because I'm sure a lot of folks have been sitting in the market sweating this thing out, and they haven't properly diversified between safety and risk. That's one of the things that we look at for all our clients is looking at that number. How much do we have that's safe and secure, meaning that you can't lose a dime, versus the risk where it's going to move up and down. And so, there's a balance there, and most people out there don't have it. And so that's an area that I think right now people are being given a gift to see if they can't reallocate between safety and risk, not between that funky looking pie chart, but between safety and risk. And now's a great opportunity to do that, Dave.
Absolutely. And, over the years, I think folks have probably picked up the point that, as the macro guy in this twosome, I've always been a little bit more optimistic and starry eyed than you are necessarily. You tend toward being on the realistic side, but both of us kind of look at the chart with them and say, whoa, wait a minute here. This is kind of an artificial high for a little while. And if somebody's counting on the next 2 to 3 years continuing to go up from here, that might be a little risky, especially when we look at things like the oil industry, where we're talking about bankruptcies in the oil exploration field and an entire sector of our economy in the energy field, kind of getting into some systemic difficulty that might take us down a little bit for a couple of months.
That's so true. And now is. I mean, if I just look at people and say, look, if you're in that danger zone, you're 5 to 10 years out from retirement. Now's an opportunity. You should have 40 to 50% of your portfolio. Most people, now obviously everybody's situation is a little bit different, but you should have a good bit, if not a majority, slight minority, in a principal protected type of investment to make sure that you don't lose on the downside when this thing happens. And you're right, oil is just right now, you and I just can't remember this happening to oil like we're seeing today, and that seems to be somewhat driving the markets a little bit. There's a lot of optimism out there right now with states getting ready to open back up.
Absolutely. I mean, we got to mix the two things together. Right now, we're going up on the optimism that, we're going to start actually doing business again, which is, definitely good news. But at the same time, we're going to have some systemic issues we're going to have to work over the next couple, 3, 4, 6 months, maybe or more. And to emphasize again, this isn't a call to everybody get out of equities, period. It's dead. No, it's nothing like that. It's just a matter of managing one's risk. If you're 30 years old, hey, there's a lot of buying opportunities out there.
That's right. Dave, there's one thing that we don't know. We don't know what the markets are going to do. They could be up, they could be down. But what we can do is control risk. And that's what our whole belief is here at Statler Financial, is that we want to make sure that the amount of risk people have in their portfolio matches up with them. The one thing that I think we haven't really talked about, Dave, is that, the states are all talking about, opening up. And I foresee that come Monday, that there's a good possibility that we will see that here in Florida easily. But what it doesn't tell us is how many people won't be opening up their shops. I saw a headline today that several restaurants over in the Tampa area have announced that they're closing, they're not going to reopen. So that's going to be the telltale is what is that going to look like? And how many businesses don't reopen when the economy starts to open back up?
There's the casualty count you're referring to. Plus, there's also, and you can use Atlanta and Georgia as being a template for that, even though they're allowed to reopen, a good percentage of the restaurants and stores are saying, we're going to wait a little bit farther because they're feeling like they want to respond more conservatively. So this reopening, it isn't like we're going to throw a switch and the economy is going to go crazy all at once. It'd be lovely if it did. But the conservative investor would say, whoa, let's see what happens.
Exactly. And that's, to a certain degree, that's probably smart, right? I mean, we don't know what this economy is going to do when it does open back up. There's no guarantee that that we'll be shooting straight up like a lot of people thought we would.
Absolutely. I mean, nobody expects this to be another recovery like we had out of the 08-09 recession, where it took 5-6 years to get back to zero again. But it's going to not be a 100% vertical rise. That one we can be pretty certain of.
Yeah, at this point, I think you're right, Dave. Early on, I was hopeful that we would see a bounce, but at this point, I just don't see a bounce coming. I think it's going to take a little longer than what we originally anticipated.
Yeah, how fast the bounce is probably. It's probably still going to be a bounce, but at the very least, we don't know how fast it's going to be because we've got that public discord as to whether or not it's smart to open up all at once, whether or not it's smart to stay closed a little longer. That it's not really a consensus quite yet in the public opinion.
No, it's not, and I think we still have some more time to wait it out and see how we actually come out.
That be true. We do have some companies that are telling us what happened in the prior quarter, and we've been kind of watching them like a hawk because, well, they included a few weeks during the mess that we started in March. How we got in terms of quarterly reports, Philip?
Dave, I think I see everything. I mean, I think I scanned through. I don't think I see any losers. If there is, maybe one. We
Cool.
have 3M reporting. They beat by 13 cents a share. Um, their revenue also beat. They did withdraw their full year outlook because they're just, there's that uncertainty out there.
Boy, big surprise there, right?
Yeah. And so a good day, they were up 4.5 yesterday. They're up right now 4.7% before the market opens up. So that's looking good for them. Hey, even the heavy duty guys like Caterpillar, right? They're my miss. They missed by 9 cents a share. Revenue obviously was short given everything that's happening, slow down in demand. But they're still trading up. I mean, they were up 1% yesterday. They're up another 1% right now before the market opens up. So even though they missed, they're on the right track. Looks like from a shareholder prospect.
The word is optimism, right?
That's right. We got two drug companies, Merck and Pfizer. Both of them beating. Merck by 16 cents, Pfizer by 7 cents. Revenue, again, top forecast. They are kind of warning of a few things coming up that may hurt them. But so Merck's down 2.5 this morning. Pfizer's up 2.25 this morning. So a mixed bag on the pharmaceuticals.
I was going to say, Merck I saw on my loser list, and I was wondering after beating the street how they could possibly be down 2%.
Yeah, I know. I just don't. Some warnings, I think, of this current quarter is where it's at there. PepsiCo beat by 4 cents a share. Revenue ahead also of what was expected. They are still expected to buy back. Now, this is kind of an unusual deal right here, right? They're going to still expected to buy back $2 billion in shares this year and pay $5.5 billion in dividends. So they're not hurting, I guess. They're up 1.75% this morning.
Can't live without our diet sodas, even during a recession, right?
Exactly. So
one or two more.
Okay, so we've got one you like to talk about sometimes, Harley Davidson.
Yeah.
They beat by 4 cents a share. Revenue was slightly above what was expected. However, their profit was down 45% from a year ago, same quarter. Again, because of COVID.
That should be a big drop, but I'm seeing them on my winners list this morning.
They are. They're winning today. So they did suspend their share repurchase, and they actually cut their dividend by 2 cents a share. But they're still paying a dividend, which is good. They're up 7.5, almost 7.5% this morning.
Imagine how big they'd be up if they actually had good news, huh?
Exactly. So I got D.R. Horton. When we look at the home industry, again, they beat by 18 cents a share. Revenue was above forecast, but they are saying that, sales and profits are slowing in this coming quarter, and they're seeing more cancellations due to the coronavirus, but not hurting them this morning at all. They're up almost 7% this morning.
This sounds like optimism reigning supreme even when you don't have good news. Again, green day yesterday in all the major indexes. Looks kind of green in my futures numbers too, Philip. 45 minutes early. Which way are we going?
We are all roses today, Dave. All green grass. Everything's looking good. We've got the Dow up a little over 1.5%. The S&P 500 is up not quite 1.5%. The Nasdaq's a little bit behind everybody else. They're only up about 1% this morning. On the commodity side, we see silver up 0.5%, gold up 0.3, crude oil down 8% to $11.73 a barrel right now.
Incredible. I can't get over that. I think I remember prices like that in the 60s. Overseas markets, Asian rim markets, generally kind of mixed overnight. European markets generally up halfway through their day this morning. Philip, like we were saying, advice as far as stabilization is real important to the person getting anywhere close to retirement. There's an opportunity now to do just that. How does somebody reach out and find you for that advice?
Dave, if folks out there don't know how much of their portfolio is safe and secure, they need our financial risk analysis, our financial x-ray. Give us a call at 863-382-0037 to schedule that phone visit, Zoom meeting, or we're in the office actually today. So that's a possibility too. We'll come down and meet you here at the office. And then catch us on Facebook at Statler Financial Services, where we post a lot of good information. Check out our website, statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on News Talk, 7:30 a.m.
All righty. And back here again tomorrow morning on Light FM. Philip, thank you so much, and we'll catch you then, all right?
All right, you have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us. And if you're in that retirement danger zone, please, please pick up the phone, give us a call. Let's make sure you don't have too much risk in your portfolio. We are giving a gift right now with this market being up. Now's the time to reevaluate your portfolio. Take some risk off the table. Call us for your financial x-ray, 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.